Welcome, everybody. This is the Day Trading Options Daily Review for July 21st, 2016, brought to you by www.wavesofprofit.com. I'm Scott. He's Alan. We're happy to have you along with us, and we're here to show you that you can make 10% in 10 minutes pretty much every day or any day from the stock market using stock options. And in the description below, you'll see our courses. They're very, very inexpensive. And they'll walk you through pretty much every step of the way, including some of the mental errors and beliefs that cause traders to trade poorly, shall we say. So we're looking at July 21st. Alan, were we able to make 10% in 10 minutes on this day, or was it a catastrophe?
No, it was good. And I just wanted to mention something that we added maybe 6 months ago because it helps people. And that's, our goal, of course, is this thing here called the benchmark. That's how investors, meaning the mutual fund companies, look at the market. They look at it very similar to this, not exactly, but very similar. And the point is that, let's say the stock market's worth $35 trillion. About 2/3 of that is being held by institutions. So when they're thinking about buying something, they're going to be in there buying like crazy, lots of money. And so here's the point, the summary about the benchmark. We always like to trade away from it. So you like to trade above, or when it's below, we trade that way, but we don't trade in this middle ground heading back to the line. And you can see, and I'll just clear some of this stuff, there's a reason we do that. And that's just to help people make profit more often. And because it's quite easy, and it's all about probabilities, quite easy for this thing to come down here, and then the investors are buying it because it's above the line, and then it goes up like that. Now, the other big weight that drives the market, other than investors, are some very big traders, day traders. And these are not like a bunch of guys sitting in computers. It's large investors with big chunks of money, and they account for about 20% of the daily volume in the market, where these are automated robot type things, and they operate on rules. And some of those rules, by the way, are things like this, and we happen to know them because basically I'm a quant. If you can look up what that means, but I have the same kind of math things that these guys do, and I'm looking at it where this line acts as a support or resistance. So the point of all these indicators is we have very few of them, but they're very specific and very helpful. And that's why we don't want a lot. We just want the good ones. But I just wanted to mention that one, because here in the morning, if you trade before 9:45, you could have made money on Apple running up. And then later, this was not too late, but it's a little late to get into this trade, but heading down. And if we miss it, so what? I don't care. This is not the only stock. There's lots of other stocks. We only want the good trades. So if you give up a couple of stocks, great. So here's one that is jumpy and messy and all over the board, and especially down here. If you're thinking, well, I could have made some, no, that's not an easy trade. It's choppy, messy, and yes, it's going away from the benchmark, right? So you had a little bit of money and a little bit of money and a little bit of money. That's not the way to trade. You're looking for the easier trades. Well, can you show me one? Well, how about that? It's like it steps down. It doesn't really rise back. It steps down, steps down, steps down, steps down. So how did you know to get that one? Well, let's go look at one of the things we like to have is the market. The market was flat. Then all of a sudden the market's running down. So when the time that the market's running down, you should be looking for a stock that's running down. So here it was running down. You can see there's a bunch of colors, and it ran down well, but it's also moving away from the benchmark. So why did you pick this one over another one? Well, that takes a longer explanation and a bit of study, but that's what the replay is there for. And the Facebook group is actually really good, because I see a lot of people answering each other's posts, because you've got people that are new to it and people that have been at it for a while, and they're saying, oh, well, how do I and why? And then you get answers, which is so useful. So let's look at another stock that was a little easier to predict which way it's going. Now, also below the benchmark, and it's running down. And you can see that the market, the black line, is running down. So you'd be looking for one that's running down. And this is an easier one to pick with lots of ordinary trading rules. But if we just look at, well, you know, you could have made money just in this section here, made good money. But some people that are with us for a while, they're looking for the longer trades that are reliable. And so they'll get into something like this. And why would you get out? Well, you'll notice that the market line, the prices are on the wrong side of the market line for the first time right there. So that's the clue. That's one way to trade, that while maybe the party's over. And there's other indicators that we have as well. And it's like ice cream. You know, some people like chocolate. You just can't give them vanilla or strawberry or whatever it is. So there are a bunch of indicators. There's not that many. Like I say, we keep it trimmed to good ones only. And there's a few in there for people that are used to like Fibonacci's and whatever. So we've got a nicer version of the fibs sitting in there. But the idea is you pick the one you like and you use that. So for example, in this long trade we have here, if you don't like this market line, the black one, I'm going to take it off. And you can develop your own rule that says, well, I'm going to get out when I get an opposite color K-band tint. That's this blue tint. That's time. That's my time to leave. You say, well, okay, that's great. And somebody else will come along and say, well, I'm going to wait until it jumps back into the risk zone. And it's like, well, that works too. Or I like the mag line, and that's that blue line. I'm just going to get rid of a couple of things so you can see the rest of it. So I'm going to get out because the price crossed the mag line here. Or, well, I had two greens in a row. This one was higher than that one. Certainly I'm going to get out when this other background color turns green. So we don't tell you you have to eat ice cream of a flavor you don't like. We tell you, listen, these indicators all work. They're all good. You can pick the one you like and leave. And another one, just so you know, and we're using all the same stuff, is there's this Y point, which is a really fast marker for that one will tell you on this candle here that the market's, you know, got a resistance point that it's fighting. If it breaks it, great. If it doesn't, get out. So the way to use the Y point is you say, well, if I move above, and here's another one right here, a previous one, then I should get out. So you can see there's these other little brown ones here. So it's coming down and then it's coming up and it almost sort of kind of breaks it and then it comes down again. But like here, getting above that price, that would be a point to leave also. So you can play with it, fine tune it, make it yours in the sense of, well, which one do you like? For people that like moving averages, you can add all that kind of stuff. There's a bunch of them in there. But these other indicators are actually more sophisticated. A moving average is just a pure math formula. That's all it is. And these indicators have a lot of logic to help filter out stuff. So it's logic plus formulas. And that's the kind of stuff that works better. And so that's really about it for, you know, looking at today. There were other stocks. There was, you know, one that fought the market, and the rest of them all pretty much followed the market, which is why we like this market black line. You're not supposed to fight certain lines. You're not supposed to fight the mag line. You're not supposed to fight the market. The mag line is about the stock. The market, hello, you know, it's all running down. You wouldn't be wanting to be like this black headed to straight down. Why are you buying something on the green or holding something that's green?
So, Alan, that market line, is that the Dow Jones Industrial Average?
No, the Dow is only 30 stocks. This represents about 3,000 stocks.
So it's a really good indication of what the market really is doing.
Yeah, and those are the 3,000 most active, meaning the most shares traded, most of everything. So, you know, there's the bottom 30,000 stocks that are, you know, pink sheets, over the counter, super thinly traded. We don't care about that. That's not where the money's moving. That black line, that's telling you where the money is. The money's selling or the money's buying. And I mean by, you're talking about how many billions of dollars are traded. Maybe about 250 billion dollars are traded in and out of stocks. The stocks. So when you see like a few billion dollars driving downhill, it's like, well, maybe I should get out or ride it.
Right. Okay, so could we go to around 11:25? Because what I'd like to do is just use the buy sell function of the replay.
Sure.
So that this is a great way for you to figure out exactly, how much money you would have made, relatively speaking, relatively close, I guess.
Sure. You're talking, you want to look at Tesla, right?
Yeah. So you've got the Y point. So don't go any further ahead. You have the Y point, which means that's a turning point. Then you've got the red candle down. Now you've got the red paint. So this might be a good time to get in.
Right. And the market's pretty red.
And it's going down.
If you want, a little bit, have I got K-band on? Don't. This is great. That right there is enough of an indicator to say you should be looking at it.
Okay, so let's buy a put.
Okay. And I'll just show you what that looks like. So that's this guy. There's the call. We want the put. So we're buying that. It says -1% because when you get to live trading, there's spread and commission. They're both small, or should be small, but it gives you a reality check that, yeah, you're going to be down a little bit if you just try to get right out right now. So here's 1 minute, 2, so you can get out at break even. 3, you're looking good. So this kind of flutter, -1, you should not be worried about that. I'm just going to start moving ahead quickly here. So there you're at your 10% already, and you've beat the bottom for the day. There's no reason to get out of this thing. There's none. The whole market is running red.
Yeah, and I was actually going to say, let's get out when we hit the Y point.
Sure.
Because that's a pretty good, there it is, right?
Right there. So if it doesn't beat that soon, like if it starts running away from it, that's time to leave. But 33%.
Yeah, that's a good time.
Yeah, exactly. So we'll just take that. And that's the whole point, is you're supposed to take these things. So, we know, that, yeah, there's another signal coming here that says, hey, you might want to get into that again.
Beautiful.
But, yeah.
All right. So there you go. And that made us 33% in how long?
Okay. Basically a half hour.
From 11:32 to 12:01. So 1% a minute.
Yeah.
Not bad.
Yeah, somebody posted in the Facebook group how there's a CD being offered at the bank, and you get 1% in a year.
Nice.
Just a whole 1%.
Excellent. Yeah, it won't take too many centuries to double that, will it?
70 years.
Cool. Awesome. Well, thank you very much, Alan. Thank you for joining us, everybody. This is the Day Trading Options Daily Review for July 21st, 2016. He's Alan. I'm Scott. www.wavesofprofit.com if you want to know more. And by the way, in the bottom right-hand corner, make sure you subscribe so you don't miss any of these. In the descriptions, we've got links to our courses. They all range from $20 to $50. So very, very inexpensive to get the basic knowledge you need in order to be successful at day trading. And when you enroll in the courses, you get a free 30-day trial with the Waves of Profit software, so you can try it out. And hopefully after the 30 days, you can see that this is a great way for you to make money using stock options. And we're here to support you every step of the way, and we appreciate having you along for the ride. See you next time, everybody. Bye-bye.